financially
Basic game.
serious. Why would you invest or not in Bitcoin? Because we want to know your opinion and see if you can convince some of us to come invest in Bitcoin. Who would like to go first?
I'll go first.
Okay, thank you.
Not exactly for Bitcoin exactly, but I'll personally approach Bitcoin with caution, as a serious investment, maybe as a secondary or alternative investment form. But the reasons for me are volatility. It's still a very volatile investment, which you can't really predict how it's going to go, and it's not as stable as some other investments. Lack of intrinsic value, unlike stocks, which are backed by companies, and real estate, and gold, silver, any other physical assets. It's hard to determine exactly what drives Bitcoin. It's a lot of hype, a lot of different things, but the value is it's not really determined. It's determined by the people who are buying it. And regulatory uncertainty, just a lot of governments across the world are up in the air about how to properly regulate it. Some presidencies are more favorable, like President Trump is going to be more in favor for Bitcoin or cryptocurrency in general, but we're still not sure exactly how it's going to impact the cryptocurrency landscape. And again, hype is a big thing for me. It's a lot of there's a lot of also schemes and different things that go into a lot of bad characters in the cryptocurrency sector that are doing a lot of shady things, and an average person is, I don't know if they're armed or just, have the understanding or the ability to properly understand if it's a good investment or just something to stay away from. So that's my.
Thank you,
answer.
Misha. Yeah, certainly many people have those fears. So one of you guys tell us an opposite view.
Yeah, because I'm going to be a little bit mid.
What the heck is Bitcoin? I've never even heard of this thing. No, in 2022, I ended up selling all of my investments because I didn't really know what I was doing. I wasn't really doing research for myself. So I sold everything, went to 100% cash, and I asked the question, where is the best place to put my money? And so I ended up spending the next 11 months researching the answer to that question, and I kept coming back to Bitcoin, and mainly it revolves around the idea. It really starts and ends with the idea that when I'm investing my money somewhere, I'm trying to store my value across time. So if you can imagine, if I have like my value that I've earned is working or doing whatever, and I want to put it in a shoebox, and I want to take that shoebox the same size at least with me across time. So if I as an investor or a saver put my value into Bitcoin's shoebox, there's only 21 million units within that box. So if I put my money into the US dollar instead, there's an increasing amount of supply, which would almost be like that box has a leak in it, and thus my value is actually getting drained, and that's why the US dollar is a poor store value over time. So by putting my value into a fixed supply amount of units, such as Bitcoin, I can take my value with me across time without having it be debased. And there's more that goes into it, but I think that's really the foundational level for why it's a good store value and an investment or a savings technology.
Thank you, Cole. So it's something that it doesn't lose the value over time. Is
Yeah.
the main thing. Well, Chris, I would like to hear your thoughts.
Sure, and I sort of straddle both sides of the argument, but much more towards Cole's side of things. There's a number of avenues that you could take here to decide, whether or not, why I would or would not invest in Bitcoin. I would invest in Bitcoin. The first premise I would say, it's kind of like buy Bitcoin just enough, only as much as you're willing to risk losing 100% of it. That's the same position that Beata and I took when we first decided to finally invest in Bitcoin. I said, okay, take a piece of paper and I'll do the same. I want to write a number on this piece of paper and you write it on yours separately from me, and we'll flip them over at the same time and see how far apart we are. I mean, and we literally had the same exact number on that piece of paper. So okay, well, we're just going to do that finally, and this was in 2020, and that was 11 years too late kind of thing in my head, because we'd been talking about it since 2009. I'm an avid fan of Austrian School of Economics, as you know, and so I really come from that perspective. Decentralization, private property rights, governments, in essence, are perversely incentivized against us, at least publicly run government. And all of the Austrian school guys had talked about taking money and, just like we have separation of church and state, separating the creation of currency from the state itself, that's not where our value comes from. It comes from actual production and human value within the economy. And so I think Bitcoin in a lot of ways actually does a lot of those things that I find very attractive from the Austrian School of Economics. So in like thinking about the performance of Bitcoin, and these factors will change over time, but I was kind of doing a dialogue this morning, but yes, we should be right that there's a lot of volatility in Bitcoin, but that volatility is additive. So if you look at returns based on Sharpe ratios, that is the contribution of return based on the underlying volatility, these uncorrelated returns actually enhance and de-risk your portfolio. So in my view, it's important to have at least some allocation. What percentage allocation? Probably something like 2 to 5% sort of at minimum. Well, we certainly did that, and now it makes up 10% of our total net worth. I mean, it was a good investment so far. And I adopt the strategy of it's either completely worthless or completely priceless, and I'm willing to find out which one it is by being invested in that regard. In terms of its performance, about 30 to 50% of it comes from tech-driven returns, just like the way Amazon and other tech companies would, Tesla, et cetera. About 20 to 40% come from the idea that it's got a store of value. Let's call it digital gold. About 20 to 30% are driven by market speculation and sentiment. About 10 to 20% are risk-on correlation, like correlation with stocks. And about 10 to 20% is the decentralization premium. That is the value of those that you be set outside the system. And the last 10 to 20% is network growth and adoption. So think about that as you're thinking about how they'll be impacted, the price of Bitcoin. But I do think it absolutely belongs in your portfolio.
Well, thank you, Chris. Interesting view that you should invest at least as much as you are willing to lose, and so you not really have expectation of losing already. I mean, you are going to gain, or you have gained. But let's go to the second question. And well, Bitcoin, as I was saying, cryptocurrencies and blockchain technology, and there are a lot of words that are difficult to understand. So many people see Bitcoin as a tool for financial inclusion, but others argue that its benefits are primarily for the wealthy or technologically savvy. Well, what is your perspective on its accessibility and fairness? Who would like to go first?
I can go first.
Okay.
So I think it's good to compare Bitcoin's system and the way that it operates as a digital payments system versus the current system that we have in place. The current system would be like, if I want to send Misha some money, Chris would be in the middle as a gatekeeper that would have to sign off on that transaction happening. And because of him being in the middle, that gives a lot of space and potential for there to be corruption, manipulation, abuse of power, to where I wouldn't be able to send Misha money. Why would I not be able to send Misha money? Because Chris says so? Because Chris doesn't like me? Because Chris has somebody above him that says Cole is not allowed to send money? It's not really fair for everybody. Bitcoin's designed fundamentally to eliminate this person in the middle from having any sort of power. It's a peer-to-peer system, so I can access it without permission from Chris, without permission from a government or a bank. I don't have to give them my identity and sign up and verify all of that. I can just send money to Misha directly without a gatekeeper in the middle preventing me from doing that. And so that means I can't be unbanked. I can't have money in the system and then the bank is like, well, no, you can't work with us any longer because in Bitcoin there's no control or authority at the top that has that power. It's entirely peer-to-peer and decentralized, and it was designed that way to explicitly remove the middleman and the potential abuse of power that presents.
So there's an argument for the fairness of the system.
Yeah.
Really. So who would like to continue with that, considering that?
I could add a few more things, and then you can annihilate us. So, as Cole talked about the unbanked thing, look this morning, do you know 1 billion out of the 8 billion people on this planet are unbanked? They don't have bank accounts. That means there's a large cash economy in some sense, and there's some concerns about that because, well, you can't move capital that, between places very easily if you're just using cash. Cash has obviously benefits in the anonymization of transactions for people. Some people would be terrified by that, of course, but there's 1 billion people. Part of the reason that there's 1 billion people is that they don't have access. Or if they want to access banks, they've got to show an ID. They may not have one. Or they have to have a credit history. They may not have one. Or they might need to have some sort of collateral. They may not have it. Or the collateral may not be as exciting for a bank to hold this. This collateral is probably not going to hold its value like other things. It's also attractive because it's location agnostic. So as Cole touched upon, if I've got to go through an intermediary, or that intermediary decides that, you know what, we don't really like capital passing over our borders into other places. China does this so often to its citizens, capital controls. Well, there's a way to get around it, and that's what Bitcoin offers in that perspective. And you really just need internet access only to be able to become a Bitcoin holder. Low-cost transactions, remittances in third world countries are very expensive to send to and from the United States, for example. And Bitcoin has very cheap transaction costs and it's exceptionally quick as well. It's also around the clock, 24 hours a day, 7 days a week, without anyone managing the network individually. It's all by the people supporting the network. It's censorship and capital controls resistant. We saw when the truckers were revolting, they were pushing back on their government. The government starts blocking their bank accounts. The United States, I don't know if you saw the talk with Mark Andreessen, famous capitalist. He's basically saying how two banks got debanked by the United States government because they didn't like what they were doing. Actual tech entrepreneurs were being debanked. You're going to see a lot more of this dialogue happening. And these individuals have now come out of the woodwork because they were kind of afraid to speak up against the existing administration. And so looking forward to seeing what a world like that looks like. Store of value in unstable economies. Zimbabwe had tremendous inflation. What if you're stuck holding that Zimbabwean currency? We take that for granted in the United States. We're relatively stable, but even the US dollar has problems. And then there's transparency and trust. You can actually see the transactions happening on the blockchain. The blockchain's immutable. You have to have a 51% takeover of all the computers in order to stop Bitcoin. And then, the demand is constantly increasing for various reasons, which is wonderful. And the supply, which we've talked about, 21 million ever to be created, is finite. Lastly, network effects, I think, make it so that it's widely recognized. It was first to market. It's extremely stable and extremely robust technology. There's of course some reasons to be concerned about it. So a balanced view here is important, and I think our good friend Misha may bring some now.
Yeah, no, that sounds great what both of you have implied about Bitcoin, but I'm thinking of the average person, and not the ones that have the upper hand, because you have the technological savviness, that's a big thing, and then also financial savviness as well. Because a lot of people, they tend to fall into scams and different the bubbles, which a lot of people would refer to the cryptocurrency as a bubble. Like famous investors like Warren Buffett and others would not touch Bitcoin or anything to do with it. Again, I'm thinking of an average worker. They fall into different scams within the space, and it's not also easily accessible because of the cost of the transactions. They're very expensive. Can you remind me what the cost to buy and sell Bitcoin is?
To buy and sell it?
Yeah, or to buy
to
it.
send it?
Yeah.
It depends on the
Size of the
type of
transaction.
transaction
Okay.
you're doing. there's different layers to Bitcoin. So you could be at the base layer and it takes a little bit longer and you have to pay a fee. You could be on the second layer and it's quick and instantaneous and very cheap.
Okay, okay. But in general, there is a cost to it, which if you're dealing with a limited amount of money, it does, it's not as favorable. And again, the volatility of Bitcoin, so people might go in and put all their savings in it, and we don't know how that's going to turn out, or they try to gain the market and play it, and that just doesn't turn out favorable for an average person. Again, my argument is that not everybody is capable of making proper decisions, and it's a big risk to advertise and promote it until there is more stability or more governance within the space.
Excellent points on the three of you. Is yeah, you're right. Not everybody has the knowledge to be able to invest. But going back to Cole about the fairness, there are no gatekeepers that can control or can corrupt the system, and access, as Chris mentioned, many people is out of the financial system, and this will provide provides an opportunity for access. Let's go to our last question before we go to the questions of the audience. The last question is, some financial experts have called Bitcoin an speculative bubble. Whoa, what do you think about this, and is Bitcoin's value sustainable in the long term? Who would like to go first?
I can go first.
Okay.
So I think Bitcoin was created in 2009. That's when it started, and it's been the best performing asset of all time since then. So I think in a free market, if you think about what would happen as a result, Bitcoin started as this internet new cryptocurrency, this new innovation, digital. Other people would then come along and create their own version of Bitcoin, their own coin, and say, hey, I have a better Bitcoin. Buy into my coin because it's better. Give me your money. And so you've seen this happen throughout Bitcoin's history and throughout the history of cryptocurrency over the last 15 years, as people have created new coins trying to replicate Bitcoin's success and ride on the coattails of it. And so when Bitcoin goes up every 4 years or so, you see these other crypto assets go up in price as well. But what ends up happening, and what has happened in 2013 and 2017 and 2021 and the following years, is that basically 99% of these crypto coins end up becoming entirely worthless because they're not actually Bitcoin, and they're trying to speculate and make a quick buck off of Bitcoin's success. Whereas Bitcoin has always rebounded after it's risen and fallen, and it's risen higher again, and it's starting to do that once more. So the speculative bubble, more so in my eyes, comes from people trying to create a new and better Bitcoin to make money off of it, because it is the best performing asset of all time, and there's a lot of money potentially to be made from that. And so those bubbles pop continuously because they're not Bitcoin, they're not decentralized, they don't have the most secure computer network in the world. And so those bubbles pop every 4 years or so, while Bitcoin remains at the top.
Thank you, Cole. Misha, would you like to mention?
So, again, I feel like a lot of it does look like a bubble, and I'm not aware of how it started, and the person who started, what's his name?
Satoshi Nakamoto.
Yeah, like him just disappearing, and maybe for me as a common person, it's hard to understand where is the guy, or we're sure this is true story, and that somebody's not going to pull the rug from underneath us when we invest trillions of dollars into this thing, or already have. Again, lack of the fundamental value is not being backed by anything. It's very scary for me, and knowing that it's just driven on many speculative things. I'm not sure about. I also the technological, back to the last question, on the technology that supports it, like the trading platforms, I know quite a few of them just vanished and they're taking all the money with them, or it's just the money was mismanaged in these funds or platforms. I personally have a friend that lost hundreds of thousands of dollars in cryptocurrency when somebody went out of business. And understanding keys and wallets and properly protecting your assets is which are not backed by anything. Like the bank, if you were to take money there, there's at least a $250,000 backing if somebody was to defraud you or do anything, anything was to happen to that money. So I don't know if if it's a good solid investment for an average person.
Yeah, Chris.
There's a few points that I definitely want to make here. First of all, on the bubble speculation, there's a very large and prominent research and hedge company and hedge fund called Man Financial. And this was one of the things that really convinced me that Bitcoin was not tulips. Everybody knows the tulips analogy from Holland. It's overplayed, but regardless, it doesn't apply here. So Man Financial looked at all speculative bubbles going back as far as we know in history. And Bitcoin was the first time that a bubble had burst 3 times, right? It had gone up and then down, lost 80% of its value, then up again, down 80%, and up again. And it basically has continued this, and it's got sort of a 4-year cycle, if you will, related to the halving. So in that sense, I was like, the first time ever, huh? Maybe this isn't really a bubble. It's that people perceive it as a bubble because it's so volatile. The reason it's so volatile is some of the reasons that I gave earlier, and that 50% of its typical performance is based on the fact that it acts like a tech stock. Should we be worried about that in the future? No, because as adoption grows, that percentage, that 50%, will drop. It will become much, much less like a tech stock and much more like a store of value, much more like a currency. Much less volatile, but still outperforming on a volatility adjusted basis, i.e. a higher Sharpe ratio than almost any other assets you have. And either you're going to get, I think, forced in because you're going to say, I would rather not have that, I'd rather have this. That's my speculation on Bitcoin. I also want to take away the intrinsic value issue. We all use the internet all day. We're online right now. Who controls that? Nobody knows, right? Do you need to know who controls that? No, you use it every single day. It's a digital asset that we use all the time. It's open source. Everybody utilizes it. TCP/IP. And Bitcoin could be viewed the same way. It has intrinsic value because of the network, the security value, the decentralization, all the things that we've already talked about. Don't get scared by the 100,000 per coin thing, because we should be looking at market capitalization. In terms of market capitalization, it's still nowhere near the largest asset. And if you ever read any of Cole's stuff, the idea is that Bitcoin will ultimately steal away the premium and market value from all these assets that have gained because of the fiat currency system that we have. We've talked about the digital gold argument, that's the store of value. Adoption, we're seeing corporate treasuries pick up these coins like Tesla and other companies. Institutionals are doing ETFs and also other financial vehicles. Governments are adding them as treasury assets and also legal tender like El Salvador, and that company Prospera has also made it a key asset. We see performance resilience. We've had 100% returns in some years, the Man Financial argument I made, and it's also a macroeconomic hedge. Uncorrelated returns in a highly correlated, dangerously highly correlated realm. I view you definitely need some amount of Bitcoin in your portfolio. And I do think long-term it will, as I said, either be completely worthless or completely priceless. And I'm willing to find out. Yeah.
Thank you, Chris. I see you are like going to the point of misunderstood. It's a misunderstood technology, I'll say that. And we just have to learn more to be, the more we learn about cryptocurrencies in general, will make it less speculative. And well, we'll have everybody. We'll see. And let's open the floor for questions from the audience. I'm sure there are many questions about Bitcoin.
Wow.
Wow.
Good luck, madam.
Piyush, Josh, Rob, Jessica.
So you a limit to how many bitcoins can be mined? Did you say it was 21,000?
Million.
1 million, yeah.
So who determines that?
Say it again?
So how does one come with that number? Who limits the production of bitcoins?
So the total amount of bitcoins is built into the code of Bitcoin. So similar, I think the internet is perhaps the best analogy for Bitcoin. So the internet is just a series of programs, really, that are all connected that nobody really controls and manipulates. It's just built in, and we use it, and we run the internet. And Bitcoin is much the same. So Bitcoin, within its code, says that there's a limit, ultimately through the mining process, up to 21 million Bitcoins and never more. And it does this through a programmatically supply reduction every 4 years in the amount of Bitcoins that are mined, all the way up until the year 2140 is when the last Bitcoin will be mined. So that's just built into the code. Yeah.
How could you change the code, or could you change the code?
It'd be extremely difficult. You'd have to get over 90% consensus, essentially, to branch off and essentially change Bitcoin. It would be even more difficult. It's kind of like the Constitution a little bit, but it's even more difficult than doing that. Than doing so. I believe you need 2/3 to amend the Constitution. You need almost 90% for it.
Thank you. Josh?
Yeah. My question is, for Chris, in the scenario where it's either completely valuable or completely worthless, how could it possibly become worthless?
Well, there's a number of Bitcoiners, and I like to say I'm somewhat of a Bitcoiner, but I have nowhere near the knowledge of people like Cole does about like the underlying protocols. I know enough about it to be dangerous and enough to be convinced, let's say. I obviously don't believe that it's going to be worthless, but there's a few different attack vectors. So if you live in a country like North Korea, let's say, and you find that the penalty for holding, they decide to make a law that says the penalty holding for Bitcoin is public execution. They could do that, right? They could just decide in North Korea. You'd say, how would it, you couldn't imagine it here, but maybe a place like that. That would probably limit adoption to only the most brave people in the country of North Korea. There's ways to do it, and there's ways that you'll never be found out, of course, and that's what Bitcoiners love about it. But even in this country, right, you can drag things out for a long time from a regulatory perspective. You could do what FDR did in the 1930s, which was to say, you better give us your gold, otherwise you're basically, I can't remember if it was fines or jail time. Government can do that kind of stuff, and it'll keep people away for a while, ultimately. You could also, I think, try to attach like debt instruments to Bitcoin in some way and say the only way you can hold Bitcoin is in ETFs, for example, or some other attached debt instrument that really it doesn't do it but de facto it starts to just drag on it. I just think that's temporal, meaning that over time that effect ultimately goes away, because now you're seeing with administrations the winds change as it is about to. I can't think of a really very strong reason why it would be worthless. I think early on it was kind of scary. Or you put yourself in a position like Misha was talking about, where your portfolio is worthless, because early on, if I had invested the way I invest now, the exchange that I might have bought it on is completely gone. FTX explodes, that kind of thing. Every Bitcoiner is going to say, not your keys, not your coins, hold it off somewhere else outside of a system. Don't put it on an exchange. I'm kind of scared that I will screw it up, and so I don't hold it the way that typically Bitcoiners do. And I think the longer I hold it, the more confident I am that I think I'm going to be okay. I think I have it in a place. Cole will probably slap me at the end of this meeting because he knows it's wrong. But I know that I'll probably fumble the football on the way I hold it. So less so that Bitcoin will be worthless, but that I screw it up in some way is probably the thing I'd be concerned with at the personal level.
Let's go with Rob.
Yeah. So me personally, in my mid-60s, I'm still, I'm in the not so risk-averse investment portfolio. Being retired, living off that investment portfolio. Is this still a good investment for somebody like me, where you're looking for a little less risk? And then the other question is, if I was going to do this, how do I start? Where do I go? And how do I kind of begin to get into it and not lose my password like some people and all that other stuff that I hear in the news, like I'm worth $80 million, but I haven't got my password, so it's just out there in the cyberspace. I'm just scared about it. How do I go about getting
I just want to answer one point, and then I'll turn it to the expert. You know, either one of you wants to address like the how and like how to do it the right way. The greatest things in humanity are the things that people have built not for themselves, but for a future, for beyond their lifetime. It's said that the Duomo in Italy, which is this beautiful, tremendously inspiring building with tremendous artwork, the original architect did not live to see it. I think it was his great or even great-great-grandson that was there to see the final thing put together. And I think if we are to be the greatest of ourselves, that we look to build things. And that works for our financial portfolios. I don't own investment in Prospera for myself. I don't own an investment in Bitcoin for myself. I want to be able to leave a legacy to everyone that comes after me. And then with that comes like not turning it into a weapon, because wealth can become a weapon if you put it into your children's hands and they don't know how to utilize it. So that's the most important thing for me ultimately. And I'll yield my rest of my time for the rest of that question.
That was a really cool answer. Yeah, I think it's very true. To answer your second part of the question, or second question, I would say reach out to somebody that knows more so what goes on in the Bitcoin space and knows how to properly take care of keys and knows how to buy it and knows a thing or two because they've seen a thing or two and they've been around for a little bit. In 2021, I held other cryptocurrencies and I ended up making a bad investment, which taught me the lesson ultimately that led me to Bitcoin. And then even in that year when I had some Bitcoin in 2022, I held a little bit on FTX. And in FTX at the end of that year, it was discovered to be completely fraudulent and the whole thing went bankrupt. Thankfully, a couple weeks before that happened, I took my money out. But if you didn't know any better, you would just buy it on an exchange, hold it on there, and you would have lost your Bitcoin. So I would say reach out to somebody that has some experience and they'd be happy to help, me included.
Yeah.
Oh, Jasmine?
So,
That was actually the question.
Okay, so Cody.
Yeah, I can take my money and turn it to Bitcoins. Will Bitcoins be turned into cash? And unless we went universally on Bitcoin, how am I gonna go buy my loaf of bread at Publix?
Good question. You could turn it back into dollars. There are apps and companies that have built technologies to where you can hold all of your balance in Bitcoin and it will automatically transfer it into dollars and you can spend those if you so choose. When I was in Honduras at the start of this year, basically everywhere in this part of the island that I was on, Roatan,